Hello, it's a pleasure to be speaking to you today. My name is Jason Lane-Sellers and I am a Director of Fraud and Identity at LexisNexis Risk Solutions. I'm going to be talking to you about how you can accelerate secure payments with digital identities. But first, let's point to the picture of what is happening and what risks do we have and why do we need secure payments. At LexisNexis Risk Solutions, we perform a Cybercrime Report and release a Cybercrime Report twice every year, looking at billions of digital transactions that happen across our identity network. Over the first half of 21, which these statistics are taken from, transactions in that network have grown year on year over 28%. As such, we are seeing a massive increase in digital take-up and digital interactions in the payment space. But what we're also seeing is the fact that, due to effects of the current kind of global situation, actually automated bots are the driving those attacks. We're seeing attacks being automated and manipulated by criminals from around the world, targeting different countries and different providers. And that growth year upon year for 2021 has been over 41%, which is a huge growth in kind of bot-orientated, automated-orientated attacks. Now, on top of this, within the report, we produce an identity index, which actually shows us the kind of volume, scale of attacks and the level of risk within attacks when they happen within our identity network. And we can see that these attacks are happening continually throughout the year. This little graph shows the first 6 months of this year, and we can see where there's spikes of activity, high aspects of activity, concerted fraudulent attacks that are happening globally across different marketplaces, different countries, and different organizations. So we have attacks against payment gateways themselves, originating from different locations around the world, looking at spoofing their device, manipulating device identity, manipulating their IP. They attack marketplaces and kind of e-commerce providers, looking to create fake new accounts. Again, using combinations of IP and identity spoofing to do so, but again, originate and manipulate those attacks across global parameters from different countries, different operations, even in this currently changing situation. Other attacks are taken against finance companies, other payment companies. We see attacks against insurance, telco, healthcare, banking, growth of scam attacks as well, and scam and social engineering situations where credential testing is manipulated against organizations in one organization, and then those credentials are utilized to perform kind of fraudulent transactions in another, ultimately causing fraudulent payments or transactions to occur. So with that means that we have different touch points across the journey where fraud threats occur. New account creations is an obvious one. Over 1 in 10, 1 in 11 transactions happening as a new account creation in the e-commerce space, in the digital space particularly, tends to be attempted fraud or fraud attack. When we have digital platforms, logging in account management are essential to actually managing those digital interactions, that digital customer experience. They are a target of attack. But payments is by most the highest volume of potential attacks that we have in any of the touch points, because the amount of payments that operate both for e-commerce, banking, finance, fintech, etc. The payment space is huge in terms of scale of transactions, but also the scale of level of attacks. And we see that if we break down the different touch points in the customer journey and look at what is happening in those spaces. So as I say, if we look at e-commerce particularly, we can see new account creations in the digital space has a high level where over 1 in 10 new account transactions are attempted fraud, and that is across verticals, across kind of marketplaces globally, which is a high level of attack, particularly in certain types of interactions like desktop interactions. But even if we take the overall rate, it's close to 6% of transactions being attempted fraud, which is a concern as we move more towards mobile as well, and kind of mobile interactions. As I mentioned, log-on activity, we have increasing activity targeting actually mobile orientated interactions. As we move people to mobile devices, mobile interactions globally, we can see again they are being targeted, and particularly their account self-service, passwords, credentials they utilize, validating logging information for use, which works in combination with scam attacks and targeted social engineering. In the payment space, the ultimate touch points may be actually lowering overall percentage, but a more consistent percentage across every touch point. So whether it's desktop, whether it's mobile browser, whether it's mobile app, it's around the 2% mark in terms of volume. And when you consider that in terms of the volume of transactions that are happening, that's 2% of 4 billion payment transactions. That's a high volume of payment fraudulent attacks that are going on. So this points to the emphasis that we need to be able to secure these. The other complexity that we see from in our Cybercrime Report and our analysis is the fact that these e-commerce attacks within that space, and particularly the payment interactions as well, are happening on a multi-country, multi-service aspect. The fraud criminal operations organizing these attacks are organized entities. Will test credentials in one marketplace, in one vertical. We will then use those details in another vertical, another marketplace, another country dynamic, and continually utilize those. But by utilizing the digital identity network and the identity information we can see that actually behind these are common digital identities with common aspects of entities, whether that's devices, the emails they're utilizing, the phone numbers they're using, or other pieces of information that correlate in terms of their digital identity. Shows us that actual fraud that's occurring in any individual space, in any individual silo, country or operation, actually are often linked globally. And we have these common digital identity dynamics of where they're initiating fraud attacks, initiating them in patterns, and several thousand events can be linked to a single fraud group or a single digital identity. So that means in terms of what we have to do is we need to deliver a service in terms of payments and e-commerce space of looking at how we leverage the digital identity and how we gain the maximum benefit from what we need in this space. And that means that we need to balance our organization and our approach to this, because in the digital space, there is the need to fulfill the customer expectation. The customer journey must be smooth with the least amount of friction, least amount of interruption to that journey. But at the same time, with these volume and scale of attacks, in fraud, we need to actually combat and prevent fraud, not only as a revenue impact to ourselves, but as actually contribution to our customer experience and protecting our end consumer from manipulation, from outside interference. So we need to balance these. We need to look at how we can minimize cart abandonment, accept more orders, and protect good customers, identify good trusted customers as they interact with our services, so we can fast track them through the process. We can no longer have a single type of journey flow for every customer we interact with, where it is actually either painful because we put in too many fraud steps and step-up authentication pieces that in that journey, or that it's too loose and therefore allows too much fraud. We need to be able to balance how we treat every customer payment flow, whether it be merchant, whether it be payment, whether it be processor, acquirer, or issuers, across that whole journey space. How do we interact and how do we manage those interactions and balance these needs between us? Utilizing digital identity is one of those aspects, but there's the key problems that we need to look at. We have to prevent fraud, but also we look at how can we develop trust. And when we develop trust, how can we recognize good trusted customers in order to use that in a positive way? So advance and accelerate a trusted customer profile through our process, and then authenticate every interaction, every action that's happening to validate the transaction is being performed by the person it should be for the reason they should be, in a safe and concerted manner. So in order to meet these problems, we need to utilize digital identity. But what is digital identity? It is not the fact that you're just verifying your identity online, like a physical identity online in a digital transaction. Actually, a digital identity is the interactions you do transacting online. And many of us will have multiple personas online. We will have business personas and personal personas. So for a business aspect, I interact online. I'm checking my email. I'm doing interactions. I may be booking flights for travel, hotels. I may be doing research online, going to certain websites and certain pieces of information, news articles, etc. Downloading kind of journals or scientific documents. All these kind of interactions, different web pages, different touch points, different types of interactions. Travel companies, hotel companies, advisory companies, review organizations, reviews, news, email. That is my business persona, and I do that from different locations. I do that from my office location when I travel to the office. I may be doing it from my home location, but also I may be traveling to and from in between. Maybe certain touch points, certain areas where I may be interacting with. But also I have a private interaction, my own personal persona, and I may be using a different device for that personal persona. I have my own business phone and a personal phone, my own iPad or laptop versus my work laptop or interaction. And again, I'll be doing different types of things. I'll be doing social media interactions. I may be looking to pay some bills and transactions. I may be looking to purchase things online, buy new tops, buy new clothes, buy new services to utilize, whether that be gaming services, gambling, or all those kind of interactions I may do as an individual. All these aspects are still me as a single digital identity. So as a digital identity, I need to understand the whole profile of my interaction as a digital entity, the devices I use, the locations I use, etc. So when we talk about building a true digital identity, we need to look at multiple touch points. We need to gather lots of data. And the data we look at aspects of what devices do I use? Can I profile and understand and fingerprint those devices? There may be devices I use continuously, like my phone, and there may be occasional devices I use, maybe like an iPad I use to travel to watch TV content on. I may only use that randomly. That may be a shared device with my family. So I need to be able to understand that and understand the context of how I utilize those devices, which devices I utilize, and how often and where. What information do I use for those devices? What phone numbers are associated with them? What email addresses are associated with them? Maybe actual physical addresses for delivery information and registration information, etc. If I'm doing payments, what kind of payments do I tend to transact? What amounts? Where am I sending money to? Who are my beneficiaries? My kind of common interactions? Look at location information. Yes, IP address, multiple IP addresses I may utilize. My home one, shared Wi-Fi on the train into work, an office location or an office VPN. So I have touch points of where I have and what activity and what types of activity I'm doing with them. But also kind of then looking at what transactions occur, when they happen, what proximity they happen, and where they happen. Does that make sense in terms of my profile? We need to build all this information together and link it to a single digital identity in the background, link it to other entities that may be my family members and cross association with, and how those entities interact and combine. And then build up a profile and history of that behavior and how it interacts. So at my next transaction, I have a view of who that digital identity is and how they've been performing and how they've been interacting previously. I can then look at also aspects of threats. So am I trying to hide my information? Have I got association with previously fraudulent behavior, previous fraudulent activity? Is the velocity and frequency of my events, does it make sense? Does my interactions make sense? Also, utilizing technologies like behavioral biometrics, how I actually hold and utilize devices. What keyboard interactions do I use? What mouse interactions do I use, etc. Build that into the profile. Are there things that stand out that are not common or do not make sense? We build that into a digital identity to then look at what happens next. So that next payment transaction, does that payment transaction stack up? Is my locations, etc. different? And we start to build that information through to gather strength for each and every real-time transaction. So we can bring that all together. So when I'm interacting, looking to transact on my, whether it be app or web page or digital interface, I can start asking questions around the digital identity to validate that transaction, that payment at that time. So I can look at things like the device. Is it a brand new device? Is it how has that device been utilized? How has that interacted? Has it been interacted with multiple customers, etc.? Where am I using it from? Is it the same location I've utilized it from previously, etc.? Am my behavioral patterns consistent? Am I doing things that are out of kilter with what I normally do? A transaction that's extraordinarily large, a transaction at a strange time of day. Am I taking longer than I normally do to transact? Do I look like I'm being guided through the process rather than knowing what I'm doing? Am I using, am I copying and pasting my own phone number into a page? Should I be doing that? Those type of things. So I can start to assess all these different indicators to assess, okay, how do I define a trusted customer versus a fraudulent interaction? And I look at aspects such as highlighting the good behavior, comparing that with a potentially risky behavior or risky interactions, and balancing a decision point to kind of say, based on the predominant factors that are highlighted, those are the grid, there's no threats, my pattern's consistent, my Wi-Fi and location consistent, but I just happen to be utilizing a new device. I may be able to validate that as actually, even though it's a new device, it's still the good trusted customer coming in on our interaction. I don't make a false assumption that it's a new device, therefore it's a high risk. People do get new devices, utilize new devices, share devices for doing transactions. So understanding the wider range of behavior within the digital identity allows us to make successful trust decisions. And in reverse, it allows us to highlight potential fraud and risk in real time, allowing us to interfere and intercept a payment transaction. So as such, we can actually look to manage and enable successful transactions in the payment space. All this without interfering with the customer journey, without interfering with the customer experience, without putting steps or validation criteria within that payment journey. That makes it a good customer experience. Better satisfaction from the customer means more conversion in sales, means a greater understanding and capability from all sides. So therefore, utilizing digital identity can bring you key benefits within the payment infrastructure. If you're a merchant, it allows you to utilize digital identities to reduce those kind of review rates, reduce the things you're rejecting, reduce inappropriate blocking or step ups for your consumers, but at the same time preventing fraud, reducing chargebacks, reducing costs, reducing impact. Acquirers, making sure we're not protecting the account from account takeovers. So you're helping merchants authenticate and validate good trusted customers. In the PSP world, we're reducing friction and again increasing conversions and lowering fraud. Issuers, you're enhancing that initial validation, that consumer validation, authentication, as well as kind of during aspects of provision of third-party services. You identify the risks in the profile of the utilizers. And again, just generally within the card network, you increase those approval rates by passively authenticating and identifying trusted users and fraudulent transactions, but by utilizing the digital identity in the most effective way. So I say payments fraud, payments risk is growing, particularly in the digital space. The volume of transactions we're expecting, the volumes of transactions we're processing now is growing and growing on a daily basis, due to the move to digital, both from a kind of customer experience growth point of view, but also because of the global situation. But by using digital identity, we can protect ourselves, we can protect our customer, and improve our customer journey and customer experience to make it smooth and frictionless without being painful for the end result, of course, and resulting in a greater increase in the digital interactions. Thank you very much for listening. Thank you. I hope you found that insightful and useful, and thank you very much.